Bitcoin has officially broken out from the daily range, and now we are in a trend, not in a range, against my will and against the logical structure will. But this is good. That makes okay. That's good. We've broken the solid resistance. We closed above it, so we are in a daily uptrend, and this uptrend should last for I don't know. Like so far, there is no signs for it to be a false breakout, but just keep in mind as long as we're below 1.2, the 1.2 as you see on my Fibonacci tool, it could be a false breakout. However, we do not want to anticipate anything that's not in the structure, but I see it very shallow uptrend. Like it's not usually when you range like that, when you consolidate like this, the way we've seen here, you should impulse through the resistance. But we didn't that much. Like, see, look at that. There is no impulse, no impulse, no impulse. We've been ranging here, range, 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 coming into the resistance. We rejected it once, twice, and then the third time we held the bands. By the way, here. So in the third time we should impulse through it, but like it's very shallow. This one is very shallow. This one is very shallow. It seems weak to me, but I'm not going to argue to the structure. I'm not going to argue with anything that's presented to me on the chart right now. So the chart is telling me and the structure is telling me that we are in an uptrend, in a daily uptrend. So, okay, daily uptrend, whatever, let it be. But I want you guys to be careful because as long as we're below 1.2 and as I see the slowing momentum we have in here, that could be a false breakout. Until then, we're treated as an uptrend. But once it gets back inside and it couldn't hold or flip the resistance, like this resistance now should be flipped into support. But given the very slowing momentum, the shallow uptrend that we see, and we couldn't get above 1.2, I think this might be a false breakout. But until then, until the price rejects back inside, we could say it's a false breakout. Now I cannot say it because it's against the structure. The structure is telling me it's an uptrend. So I'll treat it as an uptrend, but with cautious. Anyways, let's do some top to down analysis. Let's go to a very big history chart, like a chart with a lot of history. Okay, let's do our top to down analysis, full analysis from the monthly till the 4 hour. I think anything lower than that doesn't really like it doesn't move the needle to me. It's not necessary. Anyways, so we've been going up as simple as why. If you're asking your why we're going up now, why? Because we held the 50 monthly EMA. We've tried to lose it first time. That's the first time we tried and we failed. Second time we tried and we failed. Let me zoom in for you guys so you can see. So we failed here. We failed here. We failed here. And trading 101 and price action 101, if you kept testing some side and you couldn't break it, you go to the other side. So you tried to break it three times, one, two, three times, and you couldn't break it. So it makes a lot of sense for the structure and for the price to move to the other side. So you tried to break it here, break it, break it, break. Couldn't, then bam, you go to the other side because you're seeking liquidity. You've taken all the liquidity from here. Now you're seeking the other side, which is giving you a lot of liquidity. The price moves where the liquidity exists because the market exists to facilitate trades. And the way to facilitate trades and buy and sell something is to move where the liquidity it is. Okay? So, yeah, this is why we bonus. We've been held on it for a very long time. We failed to break through it. So it makes a lot of sense for us to bonus to the opposite direction so we could take out the liquidity here. But you should be careful because now we're testing the bands and we're testing something very important as well. Now, something very important that you're not paying attention to is the market structure break. You see, this one could be a market structure break, arguably, because yeah, well, that's the last low before we try to go a new all-time high. Like arguably, but I'll say it's internal. Like I'd say it's internal market structure break, but this one is the real market structure break. So now we're retesting the market structure break that marked the change of character of our market phase. Also, we're retesting the bands. So we're at a very high resistance area at this moment, okay, on the monthly chart. So we're sitting at like this level is crucial. If we reclaim it, okay, we have more upside potential. If we reject it, then we're going back to the range, just like that. As simple as that. So yeah, just like this, stick to the analysis and stick to the chart. If we couldn't break that level, then we're gonna reverse or go to the midterm of the range. I'm not saying we go into zero, but I'm saying that if we keep failing this or we couldn't break this, we could retest 79K and 75K even again. Okay, okay. That's the first thing that you need to look at on the monthly chart beside the 50 monthly EMA. Let's go to the weekly, which is more important to me actually, and this is why I tried to do that top to down analysis. I told people it makes a lot of sense for you to buy at the last accumulation zone here. So the last accumulation zone, if you see it, it's here, like at the exact these level. But there is a big difference between trading and investment. If you trade, you shouldn't buy blindly here as a trader. But as an investor, it makes a lot of sense for you to buy Bitcoin at this area. Along this circle, anything within this circle, it's okay for you to buy Bitcoin and keep it with you for 2 years minimum or something. You sell it after 2 years or 3 years maximum, that will be like double or something like that. You see, why this area? Because this is the last accumulation area, like the epic, beautiful accumulation area before we impulsed higher and we had the election bull market, okay, when Trump took the office. So, anyway, beside that, for the long term holders, there's something you need to know in that chart. We've been respecting the 50 EMA weekly. So it was our trend guard since 2023. Okay. So we retested it here, and it held us as a support. We even retested again when the tariff sell off started because of Donald Trump and he made the tariffs and all of that. We had a sell off and it kept us intact. It kept us in an uptrend. Okay. So yeah, it helped us once, twice, three times, even four times here, but it was overwhelming amount of selling and we lost it. And once we lost the 50 EMA, we flipped it from a support to resistance. Look at that. Now it's flipped. It's confirmed now that it has flipped from a support to resistance. So, according to all what I said, you anticipate or you think, or you should think, the price should reject the 50 EMA again. As long as we're in a bear market, everyone knows we're in a bear market, and this is a counter trend rally. It's not a real one. Like it's not a bull market uptrend. It's just a counter trend rally. There is nothing going down forever. Like as I said many times, there's nothing going to zero straight to zero. No, you should have like some like counter trend rallies in between just to continue lower and do that. Like it's not we're not moving in V shapes. Okay, usually on the high time frame especially. We're not like the stock market, the S&P 500. The S&P 500 does this. They always do this. I don't know why, but whatever. We're not in the stocks, folks. Now we're talking about crypto. So yeah, what you should expect is that this 50 weekly EMA gets rejected, and even if it reclaimed, I think it's gonna be a very fake one. Like it's gonna be like, yeah, we reclaimed it there, we stayed above, but then we fail. This is how it's gonna be like. This is how I see it, to be honest, because this is a counter trend rally. It's not like we're entering a new bull market and all of this, unless we reclaim that level for me. So if you reclaim, uh, let's say 94K. 94K give or take on the weekly with a weekly close. So if we close the weekly candle above 94, okay, at this time I'm gonna be like, oh, maybe we have a super cycle or something is wrong with the 4 year cycle. But until then, it's still the 4 year cycle. The 4 year cycle is still intact. Everything is fine. We're just gonna retest. That's a counter trend rally. So we're looking at it the way it is. Okay, okay. I'm not anticipating the price to stay above the 50 weekly EMA for that much long time. I expect it to have a wick like this, a rejection wick, or a fake reclaim, as I said, and I explain it to you on the chart. What else? We go to the daily. The daily chart. Okay, the daily chart is very interesting. Like we've had a very nice breakout, but it's not. I don't know. It doesn't move the needle to me. Like the breakout, we've been ranging for a very long time, right? You see the range. It's a very big range, okay? So once like, we've been ranging, the volatility has decreased and all of that. And once you break out with this shallow candle, followed by two other shallow candles. Like it's very shallow. I don't see the momentum. Like, yeah, okay, the price has been going up and up and up. It held the bands and it consolidated above the bands. It's completely bullish. That's completely fine. But like, where's where's the if you want to confirm there is a trend, if you want to confirm there is some overwhelming buyers, you should just smash through it, right? Where's the smash? It's very shallow. Like it, compared to what we've seen. We've seen this one impulse. We've seen this one impulse, impulse. Wait, we don't have an impulse when we actually break out, which is a red flag to me. So when we break out, we're breaking out with this weak candle. This is so weak candle, by the way. If you go back to my chart where I was anticipating a rejection of the range, look at that. As long as we're below 1.2, the range deviation level, so it could deviate, like the ranges could deviate above 1, it could go to 1.2. As long as we're below 1.2, there's still a room for it to be a fake out, okay? It could be a fake out. Could be. Could be. If we kept going in that shallow pace with no, like, I don't see, where's, I don't know. But whatever. It's just, I see it shallow paces going up. It's like, whatever. Stairs up. It's not like having enough momentum to go. Yes, it's been up. They're gonna call me saying, "Oh, how dare you? You're saying it has no enough momentum. How dare you, bro? It's been going up forever." Yes, dude, but like when you break out of the resistance after a range like this, after you've been consolidating inside the bands, you should have like a good solid candle that breaks it. Like here, by the way, we've been consolidating, and once we lost that level, we impulse. This is how you break. But whatever. I'll treat the structure as it is. This is a daily uptrend, yes, but I'm not trusting it. I'm not fading it either, but I'll be careful. I'm not going to trade it with a big size or any of that. I'm not going to scale up the size. I'm not going to scale into the trades, into the longs that I'm looking at right now. I'm not scaling my size. I'm entering with baby size because it could be a false breakout. Unless we break above 1.2 on the daily basis, I still think it could be a false breakout. And even if it's not a false breakout, our selling is too close. Like our selling should be the 50 weekly EMA. So it's close. It's very close selling. But yeah, whatever. I'm trading the structure as it is. Daily uptrend, you should be looking for longs, but be careful. Personally, I'd personally be careful of that. That's the full analysis.